Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I'm a financial mediator and business valuation expert in St. Louis. Today's topic is actually talking about strategic planning, investment banking, exit planning, and really, we just use these terms a little interchangeable, but letting the numbers speak and why exit planning isn't the same as investment banking with Luntadila Paulo. And he is an immigrant from Angola. He's Pan-African, global citizen, and an entrepreneur. He founded Yeto Accounting and Tax PLLC in 2019 to help small business owners minimize their taxes and basically get ready to sell and increase their net worth. And I want to welcome you. Thank you so much for being our guest.
Thank you so much. Thank you, Melissa.
How are you dealing with, I know you said educating them on even deal structure. Like, are you having to educate them on stock and asset sales? Are you still seeing a prevalence, or what are you seeing the market moving towards?
Um, Great question again. That education piece is really critical, and we try not to be everything for the client, right? We want to make sure that the client, throughout that mini crash course we put together, we tell the client also, okay, you need to start thinking about these other consultant or professionals to bring if you really want to have a good exit. So if a client hires us to only do their initial valuation, that's all we're gonna do, but we're gonna let them know, hey, down the road you'll need XYZ. If they hire us to be their exit planning specialist, we're gonna be with them throughout the entire process until they exit, right? But we're gonna need an attorney. If they didn't hire us to do their tax planning for the exit, we're not gonna touch them. We'll tell them you need to have a tax specialist in this engagement, right? If they are in a really niche industry, let's say with crazy engineering, we might need to bring some other consultant that really specialize in that specific key area of their business, right? To make sure the company is very well positioned. But just let me go back to your question around the structure, right? The conversation around, how your deal will be structured is really important because it depends on the type of entity you run, right? If you are a single member LLC, a multi-member LLC, an S corp, a C corp, right? Uh, all this is very important. What are you trying to sell? The equity of the company, or are you trying to sell the stock? Oh, excuse me, the assets of the company, right? Is there room for section 334 or not? Like, what are we trying to accomplish here? Because we let the business owner very clear, hey, whichever direction we're gonna try to go, he's gonna have different tax consequence for you, but also the other side coming to the party is gonna have their own perception of value and different offer that they'll be trying to make. So, but here's what you need to know. But at the end of the day, we really stay on our own lane. If the client didn't hire us to do other thing for them, we're not gonna provide any advice there because our engagement letter are very clear, very clear and to the point. If you want us to do something else, then we need to either amend or sign another engagement letter. But the education piece is going to include, from A to Z, what a transaction looks like and what you should expect and who else you need to bring as part of your team. Some clients want to go cheap, and this is actually a big problem that I see. They want to use the same attorney that handles their property acquisitions. I'm just like, I tell them this is gonna be a catastrophe. Don't do it. don't do it.